Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. For this week, we'll be analyzing the markets as they closed on the 28th of September 2018, and we will be starting off with the S&P 500 E-mini futures market as usual. So this market really didn't produce a lot of fireworks in terms of any vertical price movements up or down in the last week. In fact, we spent most of the time the past week just pulling back into the uptrend. Once again, we're not looking at this as a threatening pullback at all, and just seems to be in line with all of the more recent pullbacks that we've seen into this uptrend that really just allowed for buyers a better entry point to come in again and basically take price further up north and just continue to add strength to this more recent uptrend here that we're seeing for this market. That theme seems to just follow into the last week as well. We basically saw the market sort of pull back towards these former highs over here. Of course, we had two occasions here where price in quick succession found resistance just about at the 2900 level before it eventually broke through it. And now we're just seeing the market sort of pull back to this level, and so far we're seeing signs of the market holding up at the 2900 level. So really, if this level just continues to hold, we expect this uptrend to continue going further up, and allowing for the market to possibly close in towards this more mid-term target of the 3000 big round number that we're looking at. And just looking at the way that the uptrend here has been going on, despite the pullback that we saw in the market last week, we have no reason to believe or doubt rather that this uptrend here could be losing steam, and we just expect for this uptrend to continue and continue to take price further up until we hit the 3000 big round number. Okay, so the next market we're going to be looking at here is the light crude oil futures market. This was a very interesting market to follow last week, and the primary reason for that is that we saw the market making a decisive move further away from the $1.70 price level, where we had seen the market sort of consolidate the week prior to last one. So we actually saw the market push further away, not only from the $1.70 price level, but also all these candlestick highs in here, which could be very telling about the market's potential interest in trying to retest some of the very, very important long-term levels for this market, including the $1.74 price level, the $1.75 price levels, and some of the other price levels further up north. The fact that the market has actually broken past these couple of areas that we've drawn here, including the $1.70 round number, makes for an interesting development for this market, because should the market try to pull back or the sellers try to regain control here, the market pulls back to these levels, and if the market holds at these levels and just continues to propel further up, that could make for a very, very interesting development in terms of deciding the fate of the more longer-term uptrend that eventually, or rather we should say, which initially saw us basically inch closer towards the more longer-term $1.74, $1.75 price levels over here. If you recall our analysis for this market from the prior weeks, we've been talking about how all of these I should get rid of all these arrows in here. All of these recent major periods of pullback into the uptrend here, we had said that this might be indicative of how the market is possibly trying to turn around at the $1.74, $1.75 price levels over here. But that theme seems to be fading away now that we're seeing the market actually making genuine attempts to try and at least retest the $1.74 price level. It could be way too soon to try and predict if the market was going to break the $1.74 price level and possibly just continue making a new high for the more longer term uptrend and just allow for the market to continue building on that uptrend. But just looking at the way that the market is building up towards a really formidable test of the $1.74 level here just definitely gets our interest going for this market. And what we really mean by that is that if you look at this, for example, the last time that the market bounced off of this level over here, we had the market sort of accelerating into the level, and that's usually, as we've repeatedly said in earlier videos and in earlier analysis sessions for this and other markets, that when price is really just headed sharply towards a very important level, more times than not, the market will actually bounce off of that level, or there's at least a very good likelihood or a high probability that the market could potentially bounce off of that level. We're not seeing that kind of a development here at all. We're actually seeing the market consolidate and really build up towards possibly the needed momentum that the market needs to be able to break past the $1.74 level over here. So we're just looking at a very optimistic buying environment for the light crude oil futures market over here. And so we're looking forward to a test of at least the $1.74 price level in the coming week. Of course, price is perilously close to that level anyway, so that should be on the cards, we believe, this week. And then again, depending on how the market behaves at the $1.74 price level, it could make for a very, very interesting development, in the sense that we could actually even see a new long-term high for this market if the market actually is able to break past the $1.74 price level, and we're able to close above this more recent swing high that the market created just about at the $1.74 price level. So just looking at the strong uptrend over here, and this really interesting and refreshing momentum from the buyers here, that's actually what we would be looking out for. But then again, given the importance of the $1.74 price level as a long-term area of support and resistance for the market, we wouldn't exactly be surprised if the market actually bounces off the $1.74 price level and we see the market actually re-enter into a phase of consolidation, or extended consolidation, I should say, just underneath the $1.74 price level. Okay, so the next market we're going to be looking at here is the euro currency futures market. If you recall our analysis for this market from the prior week, we had shown a lot of interest and a lot of excitement about the fact that the market seemed to have, in the week prior to last one, actually taken off above the 1.16. I should actually draw the 1.16 level over here. The fact that the market had sort of broken above the 1.16 level and was showing an attempt, a decent attempt, to try to sustain a move further up above the 1.16 level. That sort of overturned last week, as the market really wasn't able to break past all of this major period of resistance here, just underneath the 1.19 level. Of course, the market really wasn't able to break past that area of resistance, and it rebounded very, very sharply off that level. And from what we know right now, the market's actually headed right back down towards the 1.16 level, and this entire area of long-term support and resistance that the market seems to be, in the more recent past, just oscillating up and down from. And so, unlike our initial expectation of possibly seeing a more extended move further away and beyond from the 1.16 level over here, we could actually see the market re-enter into this current phase of consolidation over here, and just continue to possibly rebound and react, and at times just break underneath the 1.16 level. Basically, just continue to oscillate at this more longer-term support and resistance level that just runs right through the 1.16 level. So yeah, going forward into this week, just looking at how the market seems to be pulling back towards the 1.16 level, we really are not very hopeful of an extended move or any kind of major vertical price movement for this market going into this week. Okay, so the next market we're going to be looking at here is the gold futures market. This is another market that had a bit of an anti-climax last week. The reason for that is, if you recall our analysis from the prior week, we've been talking about how the market seemed to be entering into a very, very tight wedge pattern over here, and we had said how we would actually favor the market breaking underneath this wedge pattern into a bearish state, and basically just continue on with this more longer-term downtrend over here. That sort of seemed to be the case for the most part of the week. Although on Friday we did see the market sort of pull right back towards the wedge pattern after breaking out of it earlier on in the week, exactly as per our expectations. Although this pullback here, we wouldn't really classify it as a threatening one just yet. Of course, we have the $1,200 round number running right around here, pretty much where the market closed on Friday, as well as tons of support coming in from all these candlestick lows over here. So we do see a lot of padded protection here to basically cap any attempts from buyers to continue to take price their way. But we still haven't seen a hard break underneath the wedge pattern formation over here, in line with what we had been rather expecting, given the fact that we had a decent bit of consolidation heading into this wedge pattern formation, and the fact that the market had broken underneath it. made us believe that we could see an extended move towards the downside, and at least for the market to really test this more recent swing low over here. Like we said, we didn't really see that happen last week, but the likelihood of that happening still obviously stays in place, because like we said, we do see a lot of resistance right around where the market closed on Friday, and if the market was to continue to find resistance at that level, we could actually see the market move right back down underneath the $1,200 level once again, and try to test this more important swing low over here, and who knows, possibly create a new swing low for this more recent trend over here as well, where the market would break underneath this former low over here, possibly pull back, hold as resistance at this level, and basically continue on with the downtrend over here that initially saw the market basically close in towards the $1,200 level, that now seems to be broken. And just from the action from the past couple of weeks or so, we have a fair expectation here that the 1200 level may just actually hold as resistance and allow for the market to continue build more momentum and just a little bit more pressure towards the downside over here. Okay, so finally we look at the 10-year Treasury note futures market. This was another extremely important and an interesting market to follow last week. If you recall our analysis for this market from the prior week, we had talked about how all of this bearish activity here that we were witnessing the week prior to last one was a very welcoming sign and a very refreshing sign for a market that for a very long time really seemed to be just caught up in a very, very tight consolidation phase over here. We did say that this momentum here may just be good enough to allow for the market to basically continue on with the downtrend, the long-term downtrend that we had earlier seen for this market, and possibly be able to push underneath this more important swing low over here. Well, we did not see the developments exactly as per our expectations last week, as the market, as you can see, did actually bounce off the swing low. So we weren't able to create a new swing low for this market, but we're still looking at a very, very interesting development over here. We're still seeing strong selling come into the market. Of course, we have a bounce back just pretty much at the last at the swing low over here. And the last time that the market was here, obviously the price had bounced, and so no reason to be surprised why the market did find some support here. But however, that said, we're also looking at all of this former support here from all these more sort of short-term swing lows over here and candlestick lows. We have at least three very, very distinct areas of support that the market found pretty much at the 119 price level over here. And even though we're seeing the market sort of rebound, or I should say pull back from the swing low position that we identified earlier, we're still looking at this area of support to possibly turn into resistance, which it kind of did for the last couple of days in the past week. We did not see the buyers here really taking control. We had just one day of strong bullish activity, and after that we just had a couple of days where the market tried to test the 119 round number, which is right around here, and really failed to build any kind of momentum towards the upside, which is a very telltale sign of the fact that this former recent area of support here may just have flipped into resistance and is now allowing possibly a better entry point for sellers to continue to take price further down south. So in the coming week, if this momentum is to continue and we don't see any kind of major buying come into the market, we expect for this market to try and definitely retest this swing low over here this week and possibly create a new swing low and a possibility of this downtrend to continue, and possibly for this market to escape this more notorious sideways extended consolidation phase that it seems to be stuck in for the past several months.